Imagine the year 2019. You are first getting introduced to trading by a YouTube video online. A trading guru is trading support and resistance. You see him making 5,000 euros in a couple of minutes by just drawing some simple lines, green and red, on the chart. Of course, you're fascinated by how much money this person just made in a short period of time by just drawing some simple colored lines on the chart. You want to achieve the same results fast, so you're looking up on the internet how to trade support and resistance and what exactly is support and resistance. This was basically me back in 2019. 5 years ago, I got introduced to trading by some random person trading support and resistance on the internet. Of course, I had absolutely no idea what I was doing, so when I then started trading with demo and also with the real accounts, I lost money immediately. I didn't even know what support and resistance really was back then. I didn't know how to properly draw and how to properly trade support and resistance, and why support and resistance is one of the most peaceful ways to actually make money. First of all, I didn't really understand what support and resistance is. Support and resistance is a type of technical analysis where you are drawing either horizontal lines or diagonal lines on the chart, and you do expect price to reverse at those levels. If, for example, a market is dropping significantly and it approaches a support level, you do expect the market to retest this support level and then reverse towards the upside. And now you can go ahead, enter a trading position as soon as the market retests this support level and try to capitalize on a potential rejection away towards the upside. On the other side, if a market is rising and it retests a resistance area, you do expect a reversal away from this resistance area and a move lower over the next couple of minutes, days, weeks, or even months. Identifying these support and resistance levels helps you build a profitable trading strategy and is overall one of the easiest ways to trade. You do not need a deep understanding of markets, which of course is always helpful, but for support and resistance you do not need to understand a lot in order to start making money. How can we actually spot those support and resistance levels? Well, let's just head over to TradingView and I will quickly show you a couple of examples. Let's take a look at the world's largest company, Apple. As you can see, overall Apple is in a clear uptrend. This chart is perfectly moving from bottom left to top right, and if you can now properly identify support and resistance levels, Apple has been one of the most profitable stocks over the past decade. In order to properly spot support and resistance levels, you simply have to look at significant levels where the market previously reversed. As I already mentioned, you can either have horizontal support and resistance levels or you can have diagonal support and resistance levels, which are then simply called trend lines, and you need at least two touch points, two significant highs or two significant lows in order to draw a valid support/resistance level. Let's take a look, for example, at the period starting back in 2010. You can see that Apple is over and over again correcting those significant lows where we have a clear drop towards the downside, which is then followed by a reversal towards the upside. We had a second significant drop followed by a reversal right here in 2016 and a third significant drop followed by a reversal in the beginning of 2019. Once you identified those key levels, you now simply use a trend line in this case because it's a diagonal level, and you are just connecting those areas. As I just mentioned, you only do need two valid touch points in order to identify a support level, so you don't even need this third test right here, which means that this would have been already a valid trading opportunity. If Apple in this case is dropping after this massive pump towards the upside, you already drew your support trend line connecting those previous significant lows, and Apple then comes back to retest this lower support. You do need some kind of confirmation, but you can see the moment Apple retests this trend line, we are also starting to see bullish rejection on the monthly time frame, and therefore of course also on the smaller time frames. You can then simply go ahead and take a long position right here. Try to capitalize on this next rejection towards the upside. Keep in mind, as I just mentioned, Apple is coming from above, so it's a valid support. we do expect a bullish reversal towards the upside. And in order to capitalize on this potential reversal, you enter a long position, you have your stop somewhere just below support, and you can see from here Apple perfectly rejects and slowly reverses towards the upside, creates the next major impulse towards the upside, eventually also breaks above the previous all-time high, which was back then roughly at $57. And so far you are stuck in a massively profitable trade. Of course, you can just let the rest of your position run, and this was simply a bounce away from a diagonal bullish trend line. Let's then take a look at another trade which we took in the Elite program just a couple of months ago. Right here we are looking at Disney, ticker symbol DIS, and on Disney we had again a bounce away from a support level. Once again we are simply connecting those significant areas where Disney in the past massively dropped towards the downside and then had a beautiful reversal away towards the upside. As I mentioned, you do need at least 2 touch points in order to identify in this case, horizontal support. We had horizontal support at this $85 level. And once Disney came back to retest this support for a third time, we simply entered a buy position. What we were looking for, once again, pretty simple. Let's go back in time. Disney already retested this support right here. This would have been your perfect entry, but I was late on Disney, so I simply waited for a second retest of this horizontal structure. In this case, you can see Disney perfectly once again retested this support. We also saw already bullish confirmation on the smaller time frames. Going some back and forth, of course, you always need to be patient for those setups to play out. Those setups do not play out within a couple of seconds. Eventually, Disney perfectly rejects this support towards the upside, and we simply decided to take partials after this massive move, closing it out for a almost 1-to-2 risk to reward ratio. Now you know how to properly spot support and resistance, but why exactly and what exactly makes these levels so important and so successful when it comes to trading? First of all, drawing support and resistance levels helps you determine your potential entries with a greater accuracy. The moment a market reaches and retests a support or a resistance level, you know that at this point the market has to reverse, otherwise you have to get out of your trade. Therefore, you also always know where you have to put your stop loss and take profit. Just put your stop loss below support or above resistance, and your take profit below resistance or above support. Furthermore, trading support and resistance and combining multiple levels of the same support or of the same resistance can create what's called a confluence of support, which even gives you a higher chance, a higher probability that at this point the market will reverse. Those setups are honestly my favorite setups. You exactly know where you put your stop, you exactly know where you also have to put your take profit, and those setups just have an overall extremely high chance of playing out. Just keep in mind that when it comes to trading support and resistance, those are not magical lines on the chart as I originally thought. It's rather a method for you to properly manage risk. It's nothing which is bulletproof, and there is always a chance that a specific market will not respect and reject a specific level. Therefore, it's still crucial that you properly manage risk. You do not go all in on individual setups, and you just have to look at probabilities playing out over a very long period of time. As most of you know, I am purely a support and resistance trader. I look at support and resistance. I have a little bit of intuition which I developed over the past half a decade of my trading, and I simply trade bounces away from support and resistance levels. But just because I am profitable at doing this does not mean that you will find immediate success after you apply the rules which I just mentioned. If you already have a profitable trading strategy and you're not perfectly using support and resistance, this might be a perfect opportunity for you to start applying these rules. Since they can add value to your trading strategy, they can give you even more confirmation and make the probabilities of one individual trade playing out simply higher. Another way of trading support and resistance is not trading the actual bounces, but trading breakouts of support and resistance levels in combination, for example, with trading breakouts of patterns. This is also quite profitable. The only reason why I am not trading breakouts is because I'm purely focusing on trading reversals. I'm not a breakout trader, but if it works for you, go ahead, implement this strategy and focus on support and resistance. Support and resistance clearly gives you an edge in the market, but if you're trading support and resistance without anything else, it's still quite likely that you will not make money. You have to combine different types of analysis. You have to combine price action, proper risk management, and a good trading psychology. And if your support and resistance levels are then on point, there is a quite high chance that you will make money trading. What also increases the odds of you succeeding is using multiple time frames, one for your setups, one for analysis on the smaller time frames, and one for determining your specific entry. You can also look at volume. You do know the volume profile, which also gives you clear structure and clear indications on where a market might potentially reverse. It's basically nothing else than trading support and resistance, but with volume. And in the end, of course, although I am not a big fan of it, you can also use indicators and support and resistance levels in combination, increasing your odds of one specific setup playing out. Because let's simply take a look at the RSI, for example. You're selling at a resistance level, the RSI is also overbought. There is simply a double confluence that we will see a rejection lower away from this resistance level. In the end, you just have to make sure that you understand support and resistance. It's nothing magical. It's just a way for us as traders to properly manage risk. And if everything else is not on point, you will simply not succeed by just trading support and resistance. You still have to properly manage your psychology. You still have to fight over trading. You still have to wait for the textbook setups. You still have to wait for the overall market structure to be in your favor. It's not enough for you to simply draw support and resistance levels, and you will not start making money like that. Trading is like a cube with a lot of individual pieces, and if one piece is not in its exact space, the cube doesn't make any sense, and neither will your trading. If you do not know where to start learning support and resistance, I suggest you click the first link in the description and join my free trading community. You can get started there for free today. I will see you next week. If you enjoyed today's video, make sure you smash that like button below. Remember to keep your long-term vision.